where do we find the investment to make it happen, to bring it to life? We want to know what is available already and what is missing. So our panelists for this session, we have David Hall, Senior Researcher at the Policy Observatory in Auckland University of Technology and an innovator in green investment. We have Charles Ehrhart, Director of Sustainable Value at KPMG, and we have Cecilia Tarrant, Establishment Chair of the newly formed New Zealand Green Investment Finance. Welcome to you all. Who would like to explain to us what is green investment?
Green investment and the challenge that we're seeing here. You know, we've been speaking a lot about what needs to happen, and having plans, having a vision of where to go is fantastic, of course, necessary, but not quite sufficient. You've got to figure out how to get the energy, the dosh, the money behind that, and that's the challenge that we're looking at. And in fact, it's a terribly devilish challenge, and it's devilish both because of the scale or the vastness of the challenge, but also its complexity. And like most of these complex challenges, a good way forward, a good place to start is by disentangling some of that complexity, pulling apart some of the threads into less complex parts. And so kind of a first place to start, a first distinction to make is between the mobilization challenge associated with the costs of adapting to the physical and transition impacts of climate change, as distinct from the mobilization challenge around capital investment in low emissions technologies or the process of transforming or transitioning to a low emissions economy of our future. So that adaptation costs and mitigation investments is kind of a first layer of distinction. The scale of the challenge, it's difficult to put a number on how much money is required to cover those costs associated with adaptation, because it depends on how much we invest in mitigation and how fast we do that. The longer we wait, the less we invest in mitigation, and of course, the more the cost of adaptation increases. There is clearer effort around trying to put a number on the mitigation challenge. So what kind of capital do we need to mobilize for mitigation? The global figure that has been put forward is about $1.13 trillion US annually every year for the next 30 years. And that is just to meet the 2-degree challenge. If we look at kind of where New Zealand nests under that, what's kind of the scale of our challenge? A figure that has been put forward is around 2% equivalent of our GDP, which at today's numbers would put that figure at around 6 billion New Zealand dollars a year. So in other words, the challenge here is how do we mobilize around $6 billion New Zealand every year, growing, of course, hopefully with our GDP, over at least the next 30 years. But again, that's just for the 2-degree challenge. Trying to meet that more ambitious target of 1.5 is going to jump that up again. So those are the two big challenges. That's the scale. But again, we can disentangle that further. If we focus on that mitigation challenge, where does that money need to go? It really needs to go into 5 sectors. So it needs to go into agriculture, it needs to go into energy challenges, it needs to go into waste, industrial processes, and land use change, and forestry. And so then, well, and of course the big 2 there are really going to be agriculture and energy. And if you then ask the question, all right, so we know about how much money we need to mobilize, we know about where it needs to go, where's it going to come from? And we've really got, depending on how you want to define them, 3 pots that can come from. That can come from grants, that can come from debt, and that can come from equity. And you may want to split that out further into venture capital because it's got some of its own characteristics, or combine that in others. And so I think that the core question for us really here is, all right, so if that's where the money needs to go, if those are the pots that it can come from, how do we combine or leverage those 3 categories or those 3 pots in the most efficient and effective way possible to get us where we need to go. And I think that a little bit of the spoiler alert is, at least for myself, I have no answer on how we're going to do that. We've got lots of ideas. Fortunately, we've got lots of great examples from around the world to build upon, but we certainly have more questions than answers at this point in the game.
David, this concept of green investment, how well is it understood at this point?
Well, first of all, kia ora tātou, and tēnā koutou e ngā iwi o Taranaki, ngā mihi nui mo te manaakitanga. And also thank you to Gus Charteris and the Just Transitions Unit for all of their organisation. I think this is a really important event that we get a shared understanding of how we move forward. The conversation will need to continue and widen, but that common basis is important. Now, as for green investment and how we understand it, I mean, I think what's going on at the moment, it was mentioned yesterday, there's been a wind of change in the last couple of years, and I think that's really true. It would be easy to overstate the change that is going on in the investment sector. It's not the case that everybody in capital markets with their noses in the grindstones are thinking about green investment and thinking about climate change, and even those that are, they don't necessarily have the models and the tools to properly quantify and price climate risk. But at the same time, you wouldn't want to understate the gains and the nuance which has been brought to this conversation. There's a number of countries, jurisdictions throughout the world which are going through sustainable finance reform conversations. The EU, Canada, China, Australia, and indeed even New Zealand. The Aotearoa Circle has launched a sustainable finance forum that both me and Charles are in the technical working group for, where we're just thinking about how the financial system is set up, whether it's fit for purpose when we start to think about this wider integrated outcomes, that more nuanced picture that Kate Rayworth was describing this morning. And also, we're starting to see a change in investment patterns. One recent report quantified the institutional investors who have made commitments to divest from fossil fuels. And if you pull together their assets, that has gone from 2014, a total of 52 billion in assets, to 6 trillion in 2018. So that's a 12,000% increase in 4 years of institutional investors who are making commitments to divest from fossil fuels. And it would be easy to say that those are only commitments. It doesn't necessarily translate into action, but if we look at what NZ Super has made of its commitment to divest, in the last financial year they had reduced their carbon emissions intensity by 18.7% and their potential future emissions by about a third. So that really does translate into significant impact, and that is a consequence of getting their head around these issues. But it is interesting, what's driving it? Is it virtue? Is it sort of ethical decision making, or is it just classic financial prudence? And their description is they are reducing exposure to climate risk, offers a low-cost insurance policy. So it's very much kind of classic financial thinking applied to climate risk. And if anybody has done, carried this conversation internationally, it's Mark Carney, the governor of the Bank of England. He's, through a number of speeches over the last few years, has really shone a light on the risk that is emerging and that is locked into the future, and what the implications of that are for finance. He identifies physical risks, which are just assets and activities that will get lost because of the physical impacts of climate change. Liability risks, where parties who suffer loss or damages will seek compensation through litigation for companies and governments. And then also transition risk, which is just the systemic risk of everybody moving in a fast and large-scale way across from the high-carbon economy into the low-carbon economy. and the potential implications that could have just to destabilize the whole global financial system. And it's telling that Mark Carney is also the chairman of the Financial Stability Board in the years after the global financial crisis. So he's very attuned to these senses of risk. I'll just finish just by pointing us to New Zealand. I did a report for Ministry for Environment that just tried to survey the New Zealand landscape. It's called Climate Finance Landscape for Aotearoa New Zealand, and that was a couple of years ago, and we took some of these climate finance concepts that Charles was describing and applied them to the New Zealand context. We found that there wasn't a lot happening at that time, but true to this changing environment, you know, while we were finishing off that report, suddenly this flush of activity, a $125 million Kauri bond issued by IFC and ANZ, a refinancing program by Contact Energy, and then Auckland Council launching New Zealand's first ever certified green bond. And so there is a lot happening, and the change of government is also resulted in movement in this space, and it's probably time to get Cecilia to speak to that.
That's
question.
okay.
Yep.
Thanks for that information. Let's try and put this in a context that people can grasp, because obviously there's a real scale of literacy, isn't there, Cecilia, around this. Where do we sit broadly with green investment? Is this still seen as a really emerging area? Do you feel that the finance sector, for example, is engaging in these conversations more than it did 5 years ago?
So, tēnā koutou katoa. So, absolutely, the finance sector is definitely engaging in this. I mean, the finance sector is always going to look at where can it make money.
Yes.
And this now is where it can make money. And there is also you have to remember whose money is the finance sector investing. The finance sector is investing our money. And there is a growing number of people who are interested in green investment, in sustainability. So there's a lot more people asking, you know, what are the investments that my money is being put into?
I want to ask you the question that I asked Charles. How do you define green investment?
That's a very interesting question. For me, so I'm the chair of New Zealand Green Investment Finance.
Yes.
Our definition of what we do is only part of what green investment is.
Yes.
So there are lots of ways of defining it, but essentially the part that we're part of is lowering emissions. So
Okay, let's start with the overall concept. So what is
the
green
overall
investment?
concept, so green investment is investment that goes towards improving our climate.
Yes.
In my mind. So it goes towards making for a better future. All the things that we've been talking about in the last 2 days that need to be invested in, that's what green investment
So
is
that
for.
definition speaks to what the money is used for rather than where the money has necessarily come from. It's about the investment, the capital being used to achieve outcomes that are consistent with preventing climate change, reducing emissions, for example.
Exactly, though, and but the money that it will be coming, a lot of that money would probably identify itself as green money, because the people whose money it is are actually saying where they want their investment to go.
Okay, so how do we define green money? Because I think this stuff is important. Do you guys agree that this is important to get these definitions right so that we're on the same page? Green money is based, that we have that term based on the intention of the person that's providing the money?
No, I would say that. What do you think, Charles, or do you disagree?
No, I'm wondering about, for example, a definition of green bonds, right? For example, it's just, it's capital, it's money that is intended to create a positive environmental outcome, right? So in this sense, we could say that green capital, in the way that you're
Yes.
asking for it, is simply capital that is intended, it is applied for the purpose of having a positive environmental outcome. I think a little bit more broad than just climate change, though obviously that's at the heart of the matter
Okay.
for the moment.
Yeah.
So where are we at with tapping into this capital as a source of investment to fund projects that are going to help us in this just transition? Do you want to speak to some of the work that you've been doing on this?
So,
Cecilia?
I mean, well, we're very much in the beginning of that journey, and I think
Yes.
that's very much where New Zealand is New Zealand is very much in the beginning of the journey
Yes.
of being able to harness that money. So where we sit is our whole purpose is to accelerate low emissions investment. So we've been set up by the government as an entity, as a finance company effectively. So we're called New Zealand Green Investment Finance. We're a finance company. Our mission is to accelerate low emissions investment. So we are focused very much on lowering our emissions, on our carbon zero targets, and it is on our domestic emissions that we're focused. But in terms of our objectives in doing that, obviously our objectives are to make investment, but they are very much to make investment on a commercial basis to be able to demonstrate to the private capital sources, so to those people who have money that they need to invest and want to invest, that they can do so on a commercial basis. And we're there to provide leadership, market leadership, to try and inform both the people who are looking for capital and the people who have the capital as to how they can get together.
Right.
So we have in the past, there are times that when we were first announced, people talked about us as a fund. I think of us very much as more as an investment bank or a finance company, where one of our key roles is to put together the providers of capital and the people who need that capital. We have capital ourselves, but we have a very small amount of capital, particularly when you look at the sort of numbers that we're talking about that we need. We only have $100 million, but our goal is to leverage that $100 million and to use that $100 million to make the investments that perhaps the private providers of capital, to make those investments more economic for
And where
them.
has your $100 million come from?
So our $100 million is coming from the government.
Right. So is there a suggestion here, David, in this conversation that there is a large amount of untapped capital that is sitting out there, wherever it lives, that we're not accessing currently?
Absolutely. I mean, it's almost a cliche in the finance sector that there's oodles of capital out there looking for a home, but it just needs the right kind of deals with the right risk and return profiles and the right wider proposition. I mean, again, you wouldn't want to overstate investor appetite for these more integrated outcomes, but that is emerging, and it is starting to be demonstrated through financial flows. And sort of to your point around definitions as well, partly why it's hard to pin down a definition is because there's a whole lot of emerging frameworks for accrediting and verifying green finance or climate finance. One group that I'm familiar with, the Climate Bonds Initiative, they've really aiming for a really premium, scientifically based verification procedure with real additionality baked into their verification process, so that they can be assured that when when debt is certified by the Climate Bonds Initiative, that it really is saying what's on the tin. It's really delivering measurable impacts. And talking to them, they said that was really driven by investors because they saw the risk of being caught up in greenwashing scandals. So they were actually much more ambitious about the certification than the scientists were, because they saw that risk to their reputation.
If there is that ambiguity, I guess, or lack of consensus around definitions, though, Charles, can you understand why some people may be concerned about the level of risk associated with playing in this space?
There are so many different ways to go at this, and feeding off some of the different comments. Yes, there is the issue of risk. I'm trying to figure out how to constructively go at this. Look, one of your questions was about what's driving this. And one of our challenges right now is that it is true that in fact, one of the big drivers of why more money is going towards ESG compliant or projects with at least reduced harm to the environment, it's not so much that it has a green intentionality, that we can call it green money. It's risk management strategy. And so I think that this is really important to understand here, that we are in the process of a global wake-up call within the investor community, that the smart play, this isn't about doing the right thing, This is about just being savvy and prudent with your investments. And increasingly, it is evident that the prudent play with your investment capital is to, well, there is the risk management element, and then there's the opportunity seeking element, right? So the risk management is saying that, for instance, I don't want to put my capital into an asset, into a company, where the value can be undermined through regulatory shift, for example, like what we've seen here with, and you know, our zero carbon bill, just to keep that in context here, we're very proud about that, and we are indeed in the vanguard, but we are hardly out in that vanguard alone. This is a global process.
But let me come back to the question. So the question is around risk and the fact that if we can't get the definitions agreed upon, and we are saying to people that green investment is the way of the future, then doesn't that pose a problem?
Well, I'm not sure that we necessarily see it that way, right? I mean, and that's really one of our whole purposes, right? Is that, as Charles said, it's just a question of how do we provide the finance providers with a transaction and a structure that we convince them that has a commercial return that stacks up against the other investments that they would otherwise make. And, you know, how do we do that? And if we do that, there should be no reason that they won't make that investment. I mean, one of the challenges that we see in terms of potentially, for instance, attracting overseas capital into New Zealand into these types of projects is that right now we don't have large enough projects. You know, we're in a situation where, for instance, one of the things that potential opportunities for us is to put some sort of programmatic project in place where we build up enough investments and we build up smaller investments that we can then put together and we get it up to a sufficient size that, you know, the bond markets, the international bond markets say, okay, we can sell that. You know, I mean, we, in terms of when we were sort of setting up, I specifically asked some of my sort of colleagues from a firm I used to be associated with, I said to them, what number do I need to bring you for you to be able to take this into the bond market and issue bonds? They said 250 million. Right, so if I have a $250 million project, or if I do a number of projects that I can then package up together, I can get that out and I can bring external capital from overseas into New Zealand. Because it really, there's a very true imperative. I mean, we don't have 2% of our GDP to spend on these types of investments. So we need to attract that capital.
So what are the
overseas.
obstacles to that? Currently, what are the obstacles to that capital being accessed?
So we believe they are actually structuring the transactions, providing the transactions, structuring the transactions in such a way that we can demonstrate a commercial return.
But surely it's more than that, though. I mean, surely if it's that, I mean, you use the word prudent. If this makes so much sense, then I'm just trying to understand why it's so difficult, or why perhaps, what is it, a lack of information? Is it...
Well, it is
it a lack of competency around
lack
it?
of information, lack of
So first off,
understanding.
you need to avoid homogeneous blob syndrome. Okay.
What does that mean?
So what I mean by
Maybe
that,
generalizations.
yeah,
Well,
overgeneralization.
look, no, but hang
yeah.
on a second. The people in this room come from a wide variety of different backgrounds, and they don't work in the finance sector. So all I'm trying to do is boil this down into a form that people can actually walk away with from this session
Yep.
with an understanding
Yep.
of what
Yep.
green investment
Yep.
is.
Yep.
And I guess what I'm saying is, if we're holding up green investment as a way of the future, then we do need to be able to define it. We do need to be able to address the question of risk, and we do need to be able to say, if there's all this untapped money that, as David talked about, investors are just waiting to offer up, then why is that not happening already?
Yeah.
That's my question.
So the challenge here is about how do we mobilize capital to address climate-related challenges.
Yes.
Okay. And my point was that you need to break apart what you want to do with that capital, because the answer of how you channel it depends on where you want it to go. Okay. Adaptation, that's one conversation. Mitigation, that's another. Then under mitigation, it depends on your project types. Now, in more direct answer to your question, we're very proud about the fact that we are now in the vanguard in terms of our emissions targets. That's great. Unfortunately, we are a laggard with regards to rolling out green financial instruments in this country. There's a fundamental tension there, and we need to close that gap. Now, we are behind other markets on this, perhaps by a decade or more in a number of cases.
What is a green financial instrument?
So specifically, what are we talking about? Examples include green bonds, green loans, green mortgages. all of which are already operating in other markets with demonstrated value, which is fantastic because it means that there's relatively low risk of bringing those mechanisms and replicating them here. So then we've got questions about why are we not bringing in, replicating those kinds of mechanisms here at speed, and what can we do to accelerate the uptake and the deployment of these green finance instruments and others within a New Zealand context?
And what's the answer to that?
Well,
Is it an infrastructure problem?
I mean, to add to your point, I mean, the point I was trying to get at the very beginning was that what's driving a lot of the change is the flight from risk. And the problem is, as Charles was just saying, that some of these green investment definitions and instruments and structures haven't been done in a preemptive manner. So there's a real risk in the financial system now that capital is going to be flowing out of these investments, capital expenditure, because it starts to understand the risk involved in them. But it doesn't have anywhere from the divestment side to go into the investment side. And so we're sort of racing to catch up and to deliver that pathway that people can transition from. And that's going to require innovation, and it's a bit of trying to get ahead of the game, because that change is already happening. I mean, the scale of that change is potentially enormous. You know, the research that Mark Carney has drawn on a lot is by Carbon Tracker Initiative, which did an analysis of all global capital expenditure in fossil fuel reserves around the world, and estimated that with what we need to stay under 2 degrees, and they estimated that 60 to 80% of those investments of that capex needs to stay in the ground. So if that's right, then there's going to be at some point in the future where everybody is racing out, and the more people that can do that in advance by investing in some of these new and innovative climate finance instruments, you know, the more protected they are going to be from that risk, and the greater impacts to the global financial system.
And it's green finance instruments and institutions, and that's where Cecilia comes in, and that's an example of us pulling in global examples and building upon that.
So
Well,
Cecilia,
and Jehan,
Yes?
I think we are looking at the international experience, right? And there is one big issue with the international experience, and with the money that isn't the high risk money, and that is when you look overseas, we are modelled on the International Green Bank. So New York has a green bank, the UK has a green bank, Australia has a green bank, but a lot of the investments that they've made, the investments at the level that they've been able to really crowd in private finance, relate to renewable energy, relate to clean energy. So we have particular, we've been talking about in the last 2 days that some of the challenges we have here is that we already have 85% of renewables. So when you look at, where the money is going to come from for, some of the investments that we need, for instance, it's very important, I think, for this audience to understand the position that NZGIF, as we call ourselves, that where we sit in the market, we are at what I would call the mature project level. So when you look at the money that the government has put towards these things, you've got Callaghan Innovation that are there for the very much startup technology. You've got NZVIF and the whole angel ecosystem that they have put money into to expand and to create for that sort of early commercialization stage. And then when you actually are at a commercialization, when you've got a technology that can be commercialized, that's really the point at which we come in. And we're also not just about looking at New Zealand technologies. We're about looking at what are the best solutions throughout the world. What can we do to bring those solutions into New Zealand to lower our emissions?
Okay, a few quick questions from Slido. Somebody said, these are really simple. How do small businesses access funds from the Green Investment Fund?
They may not. We may not be the right place for them to get funds, right? However, if they do have a project, we are in the establishment phase, right? So we have actually existed as an independent company since the 12th of April. So we haven't been going for very long. We, in terms of the capital we have available, we will be putting out essentially what our investment criteria are. We have a CEO, we have a very small team, we are in the process of hiring our senior leadership team. Once we've done that, we will be coming out to the market and saying, this is how you contact us, and this is the type of investments that we are looking at and for.
Can you give us a hint as to the type or scale of investments that you'll be looking for?
I think it's probably best maybe talk about the sort of the areas that we think we'll be looking at. I think transport is an area we'll specifically be looking at, so electrification of bus fleets, different things like that. Process energy, so when we've been hearing things about like coal-fired boilers and that sort of thing, the Sinlay example was a good one, that type of thing, trying to work with the big producers who are contributing to our process energy thing. The other thing, what I would call green buildings, so energy efficiency. I think those are probably, three of the areas we see ourselves playing in. Unfortunately, at the moment, the solutions that we see at the moment, though we are certainly open to what everybody else can show us, but in the agricultural sector, the solutions are relatively immature, so that won't be where we will start playing.
Someone else says on Slido, $100 million is a drop in the ocean against the enormity of the transition costs. How much money do you really need to make an impact?
They're about leveraging. Just to be clear, they're about leveraging and unlocking much larger amounts of money. So no one's suggesting that this is the play here. That said, of course, you're right. We do need to. This is a small figure. This $100 million.
It is a small figure, and it is a place to start, right? But that is why it's such an imperative to us to crowd in private finance. It's such an imperative to us to structure transactions that we can convince the private financiers, that we can convince other sources of capital that they want to come in and do that transaction, and we can be. So we can use that capital and leverage that capital really effectively. I mean, we can be the first loss piece. We can be the piece that takes a return at a point that somebody else wouldn't, in order to leverage up somebody else's return.
But it is worth recalling as well that there's a number of different intermediaries and different actors here that are giving out finance. I mean, commercial banks play a vital role. ANZ just released a green mortgage, which gives a lower interest rate. And that's based on the presumption that there's American research that houses that have good energy efficiency standards are a third less likely to default. And so that can justify a lower interest rate for the mortgage. And so, there's a whole spectrum here for innovation around this to fill some of these gaps. And, that question around the small businesses and access to finance, hearing about those hurdles is really helpful for me, especially. I'm working with ANZ to develop a climate innovation lab where we're going to be working in that space that Kate Rayworth identified earlier, dancing and generative economy, where we're thinking, what are the kinds of outcomes that we actually want to see, going beyond sort of business as usual, and then working back from there, like we all kind of know a lot of the technical solutions for the low emissions transitions. We know it's going to involve a bit of EVs, a bit of trees, a bit of diversification of land use. But a lot of people lack finance to do that or to carry the risk. And so finance plays a vital role as an enabling mechanism. And as was touched on before, there's just a range of different instruments out there in the world, from micro loans to large green sovereign bonds, from mechanisms that allow co-ownership, cooperatives, mutuals, the green mortgages, concessional loans. And it's really just a matter of working out where you want to go and how some of these instruments might be able to help, and how to and just how to tweak things to get things over the line. We heard at the business discussion yesterday how thinking even within business as usual and just tweaking some of the risk and return expectations, you can sort of get projects over the line that have been neglected so far. But so the question is, what about working from the other end, where we've got really ambitious outcomes, which have a really fabulous, rich stack of integrated social, environmental, and economic benefits, and work back from there?
So Charles, really simply, how can we unlock this capital?
By creating more options and opportunities, and doing so at scale, right? So we've been speaking about a number of different instruments and institutions, different ways to play in this space. The challenge, frankly, is that we've got more of these pieces, of these opportunities and options that we need to put out on the table here and roll out through our markets, and we need to bring them dramatically up to scale. Now, you need to do that through relationships. That's a piece of the puzzle, but there are a lot of missed opportunities, I think, still, and ways that government and other players can contribute to addressing both of those challenges in terms of rolling out more options and bringing them up to scale.
Are we expecting change in terms of we talked about how difficult this can be for a lot of people. Are we expecting change from the government in this area, or any initiatives that might make it easier for people who are seeking that capital? Anyone?
I think Minister Shaw touched on an important issue that, you know, something like the Zero Carbon Bill, in and of itself, it doesn't fund projects or get actual policies going, but it sets the atmosphere, it creates an enabling environment, it adds some certainty which starts to get factored into people's as sense of risk and return for certain sorts of propositions. I mean, the sector that I know best is forestry, and you know, foresters, they have to operate over a 30-year timescale at least. You know, that's if you're talking about Pinus radiata plantations, and you know, so they're used to thinking about, you know, massive regulatory change, recessions, perhaps even wars over the scope of a rotation cycle for forests. So having that lack of certainty in the regulatory environment is vital, and you know, having that lack of certainty, especially around the ETS for the last few years, has been a massive disincentive for foresters, even when the carbon price is going up, because for them, you know, the risk often weighs heavier than the actual expected returns.
So Cecilia, what are the key things in the next couple of years, 5 years, 10 years, that will help to unlock this capital? Is it regulatory change? Is it making it easier for people to access the money? Is it information? What is it?
I think it's a number of things. I think first of all, it's a very good point. You know, I mean, Minister Shaw made the point that, you know, we've set the targets. So people now have to make movement. So that means people are going to be looking actually for the solutions, and the projects are going to become available. There's going to be things to finance. The second thing is that, yes, absolutely, I think there really is the information, and it's as much getting information to people who are seeking to finance solutions, as well as getting information about what we are doing and what we have available to finance. So I think it's a two-way information thing. And I think that it's also, we believe that once we start making more of these investments, that there will be a snowball effect, that you will have more capital coming to look for the investments once they see that the investments can be made successfully, and they can see that they can provide a good commercial return that is a good alternative to the other investments that they have.
So can I just add on this? So a piece of the puzzle is clearly this unlocking challenge, but it's also about channeling. And I think that government is already identifying some of the major opportunities here to redirect. And examples of that include the review of the emissions trading scheme, right? I mean, once we have a fit-for-purpose price to carbon that begins to reflect the social cost of carbon, that's a massive incentive for where we channel. And then, of course, the other big piece here is around the mandatory disclosure of climate-related risks, financial risks. Mm-hmm. And once those pieces are out there, and government has already indicated that it has identified those as major strategic pieces, and once it moves forward, we are going to see a significant redeployment of capital.
I want to give each of you a chance, just before we wrap up, to tell everybody your key point that you want people to take away on what green investment is and the opportunities that it holds for New Zealand.
My key point is that, you know, we could really think about this in a way that's unique about Aotearoa New Zealand. I'm really fascinated by a wealth management firm called Tahito, which is headed by Te Miwera Hall, and what he's trying to do is integrate kaupapa Māori into their investment strategy and the way that they screen investments. Whanaungatanga and aroha amongst the values that they're adding to traditional screening indicators, and so I'm just fascinated to see where things like this go.
Thanks, David. Charles?
I think that one of the main messages for me is that even though the number is large. And even though the challenge is significant, this is manageable. When you break it down into its constituent parts, we know how to tackle dimensions. We can take those off and then focus on those that remain that are especially thorny. So we can do this. I think that one of the things that interests me is channeling money away from risk is okay. How though, we've delayed for so long to address some of these environmental challenges broadly, of course, including climate change. The question is, how do we actually get money flowing towards those projects that result in less income for an investor, but really get to that heart of where we need to be now, which is actually regenerative as well. So carbon positive rather than just carbon negative.
I mean, I think my key message is, we are coming into the market, we are excited to be in the market, and our mission is to accelerate low emissions investment. And we want to engage with all the stakeholders on both sides of that conversation, and we're going to be open for business, and we hope that you'll be with us.
Excellent. Thanks very much to all three of you for joining us on the panel. Round of applause for them, please.